When we talk about real estate investing, the conversation often circles around young professionals, students, or growing families. But there's a quieter, rapidly growing market that too many investors overlook: retiree renters. This demographic represents a unique intersection of need, opportunity, and consistency. For investors, especially those 50 plus who want to build legacy wealth while making an impact, this could be the niche that unlocks both prosperity and purpose. Why retirees are choosing to rent? Retirement looks different today than it did 30 years ago. Downsizing for ease. A retiree who raised children in a four-bedroom home no longer needs the upkeep or expense. A single-level condo with no yard suddenly feels like freedom. Financial flexibility. Many retirees choose to sell their homes, cash out equity, and convert it into liquid assets that fund retirement, travel, or medical costs. Renting means they can enjoy life without tying up resources in property maintenance. Mobility and lifestyle. Some want to move closer to grandchildren, try living in warmer climates, or travel without being anchored to a house. Renting provides that freedom. Community and support. Senior-focused apartments, retirement communities, and age-friendly multifamily rentals provide social activities and peace of mind that appeal strongly to this group. The numbers back this up. Studies show that renters age 60 and older have been the fastest growing renter segment in the past decade. Millions are shifting away from ownership, not because they can't afford homes, but because they prefer flexibility. The hidden wealth opportunity for investors. Why does this matter for real estate investors? Because this demographic comes with built-in advantages. Steady demand. Baby boomers are retiring at a rate of 10,000 per day in the US, and Gen X is not far behind. That's a wave of potential retiree renters. Reliable tenants. Fixed income streams like pensions, retirement accounts, and Social Security mean retirees often pay on time and value stability. Low turnover. Unlike younger renters who move for jobs or lifestyle changes, retirees tend to stay put once they find the right fit. That reduces your vacancy costs. Niche positioning. By targeting retiree renters, you differentiate yourself in crowded rental markets where everyone else is chasing the same tenant pools. Imagine owning a small four-unit property near a suburban hospital, each unit modified for easy accessibility. With long-term retiree renters, you could enjoy consistent cash flow, lower turnover costs, and strong word-of-mouth referrals. What retiree renters value? If you want to attract this demographic, you must understand their priorities. It's not about granite countertops or flashy amenities. It's about comfort, dignity, and practicality. Accessibility. No stairs, walk-in showers, wider doorways, and non-slip floors. Safety. Bright lighting, secure entrances, and safe neighborhoods near healthcare. Convenience. Close to shopping centers, public transit, and recreational activities. Community. Retirees value connection. They want neighbors and activities. Affordability. They live on fixed budgets, so predictable and fair rents are essential. When you tailor your property to meet these needs, even with small upgrades, you position yourself to attract and keep high-quality tenants. Strategies to tap into the retiree renter market. Here are concrete steps to capture this opportunity. 1. Target senior-friendly locations. Look for properties near healthcare facilities, grocery stores, parks, and transportation. Suburban areas with quiet streets but quick access to services are ideal. 2. Buy small multifamily or easily adaptable homes. Duplexes, triplexes, and one-level homes are perfect for modifications. Retrofitting an existing property is often cheaper than new construction. 3. Make accessibility upgrades. Install grab bars, replace tubs with walk-in showers, add ramps, and widen doorways. These changes cost less than a kitchen remodel, but make your property 10 times more attractive to retirees. 4. Build partnerships. Work with senior centers, retirement advisors, and healthcare providers who can recommend your rentals. Partner with local senior organizations to market your properties. 5. Offer lease stability. Lock in rents for 2 to 3 years to provide predictability for retirees. This encourages long-term tenancy and reduces your turnover expenses. The wealth creation potential. When done right, investing in retiree rentals can deliver cash flow consistency. Retirees are dependable payers. Lower costs. Long-term tenants mean fewer turnovers, repairs, and vacancies. Appreciation upside. Properties near retiree-friendly amenities grow in demand and value. Scalability. Once you find the formula, location plus accessibility plus affordability, you can replicate it across multiple properties. Pause for a moment and think about this. You've spent years building wisdom, resilience, and life experience. Why not let those assets work for you in real estate? The retiree rental market isn't just another investment strategy. It's a chance to step into a niche that's growing faster than almost any other, with tenants who value stability as much as you do. If you're 50 or older, this is your lane. You understand what retirees want because you're living it or seeing it all around you. That insight is your competitive edge. So ask yourself today, what if the next property you invest in could provide both steady income for your family and a safe, welcoming home for someone else's loved one? Take that first step. The opportunity is right here, waiting for you to claim it. Think about it. While everyone else is competing for young professionals in downtown markets, you could be cornering a niche where the demand is steadily rising and the competition is thin. Impact beyond wealth. Here's the bigger picture. Retiree renters are your peers, parents, neighbors, and future self. By focusing on this market, you're not just creating wealth, you're creating housing that allows older adults to live with comfort, dignity, and joy. For investors over 50, this niche is especially meaningful. You already understand the needs, challenges, and aspirations of this generation. That personal insight gives you an advantage no spreadsheet can measure. And the payoff? A portfolio that isn't just profitable, it's purposeful. You'll create stability for yourself, your tenants, and the legacy you pass down. Final thought. The retiree rental market is one of the most undervalued opportunities in real estate today. If you're looking for a way to build consistent cash flow, lower risk, and long-term wealth, while also serving an important need in your community, this is it. Don't overlook the retiree renter. They could be the key to unlocking your next stage of real estate success. If you're 50 plus and looking to invest in real estate, don't chase the same deals as everyone else. Think differently. Look at the retiree rental market, where the demand is strong, the tenants are reliable, and the impact is real. Your next opportunity might not be downtown. It might be right in a quiet neighborhood where retirees are waiting for exactly what you can provide. If this video gave you a fresh perspective on building wealth after 50, tap that like button. It helps push this message to more people just like us. Drop a comment below and let me know. Would you consider investing in the retiree rental market? I want to hear your thoughts, your questions, and even your challenges. And most importantly, subscribe to Real 50 Plus so you never miss strategies, stories, and step-by-step guidance that prove it's never too late to start investing in real estate and building your legacy. Together, we're building more than wealth. We're building futures.